Hello there today. This is Richard Jerkins with Jerkins Financial Solutions. Wanted to take a moment to you today and talk about what's known as a graded benefit. This can confuse you if you're searching for life insurance. As I'm working with a client, this came up, and this can change everything. This cannot be an issue, but when you're shopping for final expense insurance, and we're talking guaranteed life, that is a policy final expense, $5,000, $10,000, $15,000, $20,000, $25,000. So we're talking $0 to $25,000. We're talking about a guaranteed life, meaning no health questions, no blood tests, no urine test. No matter who you are, they're going to give you a flat rate and they're going to insure you. So it would stand to reason that the insurance company is taking a little bit of a gamble based on the numbers, and likewise the rates. So who buys this policy? Someone who can't get insurance, or let me rephrase that, someone who thinks they can't get insurance because of a medical condition. For instance, talked to a fella who said he was bipolar. He said, I can't get insurance, I've got bipolar. I take medicine for it. And I said, you can get insurance. I actually have several insurance carriers for different levels of whole life, term life, and guaranteed life as well. And so that's who may purchase guaranteed life. People who don't understand financial language, which is a purpose for this video in shopping for insurance. I talk to people at different stages of life. There's people who have no financial planning and have simply never been taught. They don't know what guaranteed is. They don't know what whole is. They don't know what term is. And when someone on the phone starts rattling off all of these terms, they don't have a clear definition of what they're buying. So that's going to be the purpose of a series of these videos. And today, that is what is a graded benefit. So I'm going to use Gerber Life, which is one of the carriers that I represent here at Jerkins Financial Solutions. And I'm going to take the example of a, let's see what I wrote, a 60-year-old male, $10,000. So he wants a price, guaranteed life insurance, 60-year-old male, $10,000, $63.89 a month. That means you fill out the application, you send in $63.89, and you got $10,000 worth of coverage. But there's a stipulation called a graded death benefit. So that's what I'm going to explain today. The wording is different for each carrier, but it usually associates a low insurance amount, usually an insurance amount associated with final expense. Final expense being the cost of your funeral. When we use the term final expense, that's not mortgage protection, which pays off the house. That's not automobile protection, which pays off the car loans. That's not estate planning, where we're going to leave an amount of money for our children because we've worked our whole lives and didn't save anything because of different reasons. So we set aside paying into an insurance policy so they would have some level of financial estate, which is another reason for life insurance. But today, $5,000 to $25,000 for a policy is final expense. That covers your casket, the embalming, the visitation, the funeral, some for the minister. That covers the men to open and close your grave, your burial vault, the cost of the grave, the cost of the stone. It could be your choice of cremation services. When we talk about final expense, it's from the time you take your last breath to the time the funeral and the burial is over. And some other incidentals in there that may be non-funeral related that are small, but I'm not going to get into that in detail. That's another video, just trying to clarify that we're talking about final expense, guaranteed life. That is money for your funeral, no health questions, yes, you qualify. So the stipulation is a 2-year graded death benefit, 24 months. So let me get what is the graded benefit? So we take our example here, and with Gerber, as with other carriers, it says Gerber's Life's guarantee to accept all applicants 50 to 80 is made possible by a 2-year graded death benefit limitation. If death occurs within the first 2 policy years for any reason other than an accident, keep in mind, if it's an accidental death, then they'll pay in full. All premiums shall be paid to the beneficiary plus additional 10% of the earned premium. Now let me explain this, because this term graded always comes up around life insurance, and you need to understand graded means a stipulation for a time frame that you have to live through. So we take this example here, $63.89 per month. And this is on a 60-year-old male, $10,000 policy, $63.89 a month. Okay, this, you buy insurance, and in this example I'm going to use, let's say the person dies not from an accident, but on the 13th month as they're paying in. So we have times 13. That's $830.57. That's $63.89 per month. Keep in mind, we have not made it to the required 24 months. We have not made it to the 2-year mark. So $63.89 times 13 months, you have paid in $830.57. So your total of your premiums that you've paid in now, that's not real clear for the video. We'll try a darker color. So per what they say, the total of your premiums that you paid in before 24 months, once again, we're on the 13-month level when the death occurred after the policy was bought, 830 times 57, $830.57 times 10% equals $83.06. So now we have our 830.57, and you'll have to pardon my handwriting. The purpose of this example is to get you to a place of understanding. And we're going to add 83.06. So that is going to give you a total of what they're going to issue at the time of death. So when you come into the funeral home, you're with your family, you've got your Gerber life insurance policy, once again using today's example at today's price, and you bought this insurance and your loved one dies at 13 months you've paid in. They're going to give you your 13 months that you paid in plus the 10%, which is here. They're going to give you the 830 plus the 10%. So this is what they're going to give you because you didn't make it to the 24th month. So one side of that is you bought insurance and now they're not paying. They said they would. You had a $10,000 policy. Well, there's a side where you don't know what you bought, which is the purpose of this video. You come into the funeral home, because I have lived on that side of the table for 26 years. Indeed, I've helped folks on the insurance side of things for that length of time too. But over that 26 years, families have come in and said, I've got a policy. We make the funeral arrangements only to find out they didn't have a policy. Well, what happens is people get diagnosed with a terminal illness and then they run out and buy life insurance because they don't understand how life insurance works. And they buy a policy that doesn't require any health questions. For instance, well, I got diagnosed with cancer. I've been given 24 months to live. I'm going to go buy enough to pay for my funeral because I never thought ahead enough to buy life insurance. So what you've done is then the people who you love the most that you're buying the insurance to protect, you actually are going to cause them more grief and pain when you're gone, because the $10,000 policy is only worth $913.63 because you didn't live the term of the graded death benefit term of the 24 months. So now they've got this much towards a $10,000 bill. Now they're going around to churches. Now they're going around to Facebook pages with GoFundMe videos and links, etc., basically asking for anyone to help donate. And not only are they enduring the fact that they had to live through watching someone die of cancer and stage down to their death, now the money they thought they had, they didn't have. So now the funeral is postponed because the funeral home requires to be paid, and they're scrambling around begging throughout the community. The whole situation went from bad to worse for lack of simple planning. So that's one side of it. The other side of it is the insurance side of it. So why would an insurance company say, I'm going to guarantee you this dollar amount if you'll pay me this dollar amount a month, but by the way, you got to live 2 years? Well, that's because the situation I just told you, those people go out and buy insurance after they have been diagnosed with a terminal illness, and this is a problem. So if I were the insurance company, how many times could I take $50 to $75 a month for 2 or 3 months and then hand out $10,000? That doesn't work. The insurance company is going to be broke. So there are different algorithms, there are different number levels that they work through when they figure their rates for masses of number of people. But the stipulation is a 2-year graded death benefit with this company for this dollar amount, for this dollar amount. This is common. This is common amongst a lot of insurance carriers. It's very common in the insurance industry. So you need to be aware when you're shopping that you know what you're buying. When you're sitting at home, especially our seniors, they've already worked their life. They're living off of limited income with Social Security budgets. Their children are grown out of the house. They may not have ever had enough extra month to month while they're trying to feed their family to purchase insurance, and now they're thinking about it. These ads keep coming up on the TV that a 70-year-old with any health can get insurance for $10 a month. Well, there's some stipulations there, and I would warn you against making that call before you do all of your homework, because you need to know what you're buying. Common sense tells you that if a company sells you something for $10 and they're going to offer you $20,000 worth of coverage, that when you look at the numbers of people, this is not going to work. One company uses a unit where they sell you a unit, and then when you actually call, that $10 unit is only worth so much money. And if you want the $20,000 that they advertised at, then you have to pay a whole lot more because you're buying multiple units. So there are stipulations that are targeted towards seniors who are staying at home. And I don't like those levels of advertising. I think they're crooked and fraudulent, and they shouldn't be allowed. And that's kind of the purpose of this video, is for you to understand that when insurance policies have limitations, such as a graded death benefit, that there's a reason. There's a reason so they can keep offering reasonable coverage to a whole group of people. But if they don't put a stipulation in there, then those who are trying to take advantage of the insurance company will then put them out of business. So if that's the case, then Richard, who buys this insurance? This insurance is a lot of times purchased additionally. There are people who have life insurance bought to cover the house, which I can help you with that. There are insurances who bought with to cover the car, insurances bought with estate in mind, and then all of a sudden there's a change in life. As in, let's say we had our child's college fund put together. That person's now didn't use it all, and that college fund has now went towards a grandchild. There's been a shift. We're at the next stage in life, and it's, hey, I don't want to change anything that I currently have in place with my life insurance policies, but now I don't want the portion of that policy to go towards my funeral expense. I want to go ahead and purchase something small and cheap just for final expense. That way that insurance policy goes to this beneficiary and it's took care of. That's now for my granddaughter where it wasn't before, so I need to purchase something additional. So it can be a situation simply of financial planning for the future, and it can be a situation where there's not a health problem at all. They just want a simple, cheap policy, guaranteed rate each month. It's not going to go up, guaranteed flat rate of a face amount for payment. So there are many uses for these guaranteed life policies that don't require health questions. And just wanted to take some time and let you know that this is not a negative thing from the insurance company. This is a safeguard from the insurance company. Gerber Life has some really good rates, and they're a strong, solid company. I represent them, but just understand through my example, if you don't live through the 24 months of any graded death benefit limitation on a policy, you're going to get your money back plus 10%, and that's all they're going to do. You have to make it 24 months and 1 day, or the death has to be from an accident, and then it pays in full. I hope this has helped you. I look forward to doing more of these these training videos. I really hate to see our seniors get taken advantage of when they don't know what they're buying. And the purpose of my wife and I starting Jerkins Financial Solutions was because of my time in the funeral industry and having this situation and other situations happen again and again. So give me a call if I can help you, 336-380-3088. I'm located in Castlewood, Virginia. My office is just around the corner from my house in the town of St. Paul at the Oxbow Center. And if I can help you in any way, you give me a call and I will make time to speak to you. Thank you for watching this video. Enjoy the rest of your day.